Good morning, everyone. It is Julie here with TipRanks, and this morning we're talking about earnings reports. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. Today kicks off the start of earnings season. Over the next few weeks, we have hundreds of publicly traded companies sharing their latest quarterly report. So I thought it was a great time to bring back a quick morning recap to keep you up to date with all of these notable earnings reports. Of course, you can follow along over on TipRanks.com to see all the latest ratings pouring in on these stocks following their earnings, and you can download the TipRanks mobile app using the link down below. Also, just a reminder that Monday, January 15th, stock markets are closed for Martin Luther King Day, so I hope you all have a safe and fun long weekend. Now, to stay organized this earnings season, make sure you head over to the earnings calendar over on TipRanks. At the top, you'll see a quick summary of some of the big highlights that day and how many companies are reporting. Down below, you'll see a list of who we're expected to hear from. Let's dive right into things this morning, starting off with JP. Trading under the ticker JPM, their stock is currently up just over 1% this morning. And that is despite a Q4 earnings dip. While analysts were anticipating earnings per share of $3.35, JP reported $3.04 per share. Now that did decline 15% year over year. Their Q4 profit took a hit as they had to pay a fee of $2.9 billion as part of the government's acquisition of failed regional banks last year. Their revenues did come in at $39.94 billion, which was up 12% year over year and ahead of estimates, and they did announce that they had record full-year results with revenues of $158.1 billion. That was a jump of 23% year over year. Their stock is currently rated a moderate buy with an average upside of nearly 7%, but we'll see how analysts weigh in following this morning's report. Trading slightly in the red this morning, we have UnitedHealth. Trading under the ticker UNH, their stock has dropped off nearly 3%. And this decline comes despite posting better than expected results for both earnings and revenue. While analysts were anticipating earnings per share of $5.99, UnitedHealth posted $6.16, beating expectations by 17 cents per share. Their quarterly revenues grew 14% year over year, beating expectations by $2 billion, and annual revenue grew 15% year over year. The company also affirmed their 2024 performance objectives, which they had established previously in their investor conference. Now, there is a pending sale of their Brazil operations that will impact their net earnings by $7 billion this year as a one-time charge. Analysts do currently rate the UnitedHealth stock a strong buy, with 18 current analyst ratings and an average upside of 13%. Also in the red this morning following their earnings report is Bank of America. Trading under the ticker BAC, they're currently down just over 2% here. This is after they posted mixed results for their quarter. Revenue did decline over 10% year over year to $21.96 billion, which did miss expectations, while their earnings per share of 17 cents came in ahead of estimates. And during their quarter, their net interest income dropped by 5%. They currently get a moderate buy rating overall with an average upside of about 13%. One of our biggest declines this morning comes from Delta Airlines. Trading under the ticker DAL, their stock is currently down 7.48%. That comes after they reported earnings per share of $1.28, which did beat estimates, and operating revenues of $13.7 billion, which also beat expectations. But Delta's 2024 earnings outlook was less than their prior forecast. Despite that, they did generate record full-year revenue, nearly doubling over 2022, and they said that travel demand remains strong and that their customer base is in a healthy financial position with travel a top priority. Their stock currently is rated a unanimous strong buy with an average upside of 43%. Next, we have a company that is slightly in the green following their earnings with Blackrock. Trading under the ticker BLK, they're currently up about 0.5% this morning after posting better than expected numbers for their fourth quarter. The company also announced the acquisition of Global Infrastructure Partners in a $12 billion deal. Their fourth quarter revenue rose by 6.7% year over year to $4.6 billion, and their earnings per share of $9.66 exceeded expectations. BlackRock also announced a slight hike to their dividend of a couple percent to $5.10 per share. They currently come in with a strong buy rating and an average upside of 4.6%. Next up, we have Wells Fargo. They are slightly in the red despite an earnings and revenue beat, as they were also affected by that regional bank turbulence last year. Trading under the ticker WFC, their stock is currently down 2.2% this morning. They did report earnings per share of $1.29, coming in ahead of estimates, and revenue of $2.48 billion, which grew a couple percent year over year. Analysts do currently rate their stock a moderate buy with an average upside of over 12%. And we also have Citigroup. Their stock is trading fairly flat this morning after having mixed quarterly results. Their stock, trading under the ticker C, is currently up 0.6% and is climbing a bit here. They did jump up and then cool off here first thing this morning after posting mixed quarterly results. Revenues did come in at $17.4 billion, which did fall short of expectations, while earnings per share of 84 cents did beat. They did say that they expect their 2024 revenue to increase to about $80 to $81 billion, up from $78.5 billion in 2023. Their stock is currently rated a moderate buy, kind of split among analysts here, with an average upside of over 11%. So that is a quick overview of all the earnings reports kicking off the earnings season this morning. Don't forget that Monday the market is closed, so we'll get back to this on Tuesday with some big names reporting then. Thank you guys so much for watching. I hope you have a great long weekend, and I'll see you back here next time.